You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Great to be back, Jim. 2014 is shaping up to be pretty darn interesting.
Well, it was interesting last year, but only if you like to see negative figures. This year, it looks like commodities in general might have a brighter future, and precious metals now are back on everybody's investment chart.
They really are, and when everybody's kind of positive or moving in the same direction, the opposite of which they were doing last year because they were all moving down, that's when you want to be cautious. And I think it's pretty exciting what we've seen the last couple months. As you and I are talking today, we have palladium making an intraday intermediate term breakout. This is very exciting. We've talked about palladium for 2 years, and we said it's going to happen. It's a question of when. Only Mr. Market knows, and he seems to be telling us today that this could be the day. So pretty exciting. At the same time, a person wants to keep their emotions dialed down to a level, I think, that don't go too high or too low, and I think over time that will help them make and keep the largest amount of money.
I think what's giving palladium a bright future is the fact that China has decided that maybe having the worst air pollution in the world isn't the best thing to have. Now they're going to require that cars have catalytic converters, and gasoline-powered vehicles can use converters that use palladium instead of platinum. That's brand new technology that's come online, and I think that's one of the reasons why palladium is going to be one of the hot sellers.
This is a positive development, but you know the elements that you and I have been discussing for over 2 years are building beneath the surface like a silent current in a big deep river, and now they're starting to come closer to the surface, and of course the market anticipates things ahead of time. So now more and more people are starting to act on the anticipation of the market. As you mentioned, China is going to be more intentional about putting platinum and palladium converters into their cars. Even the ones that they had, it's my understanding that they use 1/5 as much as we do, so they're having much less effect. So the environment there and some around the bigger cities, Beijing, et cetera, has gotten so bad, and that's intersecting with the massive increase in the number of new drivers on the roadways, so they're going to have to move. And all of this, I believe, is going to be very positive for the PGMs going forward on a long-term basis.
Yeah. How hot is the automobile in China? 50,000 a day are sold. The thing is, they don't have the infrastructure to hold them either. I've seen pictures of their their 10-lane freeways, but you can't go anywhere because there aren't any exit ramps.
Yes, pretty interesting. But you know, on the precious metals, especially gold and silver and these mining stocks, I think a lot to be said is for people to ask themselves what their plan is before they do anything. If they're a long-term hold, they're all in, they're going to hold no matter what because they have for the last 3 years, that's fine. Then they go play golf. But if they want to tweak things a little, and this is what I try to do from time to time, then they want a little bit more proactive strategy. And my suggestion is to consider looking at your stocks that have doubled in the last couple of months, and several of them have for most people, and ask yourself, maybe I should sell 25% of that stock with the possibility of buying it or a better candidate back at a lower price over the next couple months. I was listening to Rick Rule speak the other day, and I think he has a lot to be said for on his opinion on this, which is we're not likely to see a rocket launch into the stratosphere where these stocks are suddenly 500% higher in a couple months than they are now. A few may be, but the general market itself is going to take time to digest what's taken place over the last 3 years. And it's going to be some back and forth action in a very broad sense with a lot of volatility, and people are going to have to be prepared to see a lot of those paper profits shrivel up in the process of dropping down, and they don't want to find themselves in an emotional position where they sell into weakness. Always try to sell into strength and buy into weakness. It's something that all of us have to practice every day that we're in the markets. We never get it perfectly right, but we try to improve over time.
David, now that we've seen palladium break out, are we going to see other metals or other precious metals pick up? Silver, everybody's asking me what's happening there, and silver always seems to move a lot slower, at least recently, than other metals.
Well, silver has tremendous volatility, and it'll sometimes sit there and do nothing for a while, and people wonder what's going on, especially if gold is moving up and some of these other metals and like palladium. But there's no natural law that says all metals have to move in tandem with each other every minute of the day. And so what I noticed in the last bull market in 1980, the really big one, the one that ended in 1980, is that I would watch gold and silver, and there would be times when gold would be just rocketing upward, and silver would be doing almost nothing. And then it was like a relay race. Then silver would take off, and gold would kind of be calm for a while. So the key is, if you can, is try to add to your positions when prices are weak or when they're calm, and not get stuck in the volatility piece where the bid-ask spread is so wide, and then you go out after what happens that you saw was going to happen and were waiting for did, while you simply didn't do anything.
Yeah, so often we talk about, well, this is, likely to happen, or that's likely to happen, but then what did you do about it?
Right. And I think it's important, the three things that are driving me right now and what I recommend to people. Number one, raise your price targets. There's these targets for the mining stocks, the better ones, and the metals prices themselves, I think are going to go much, much higher than most people believe after they've been worn out the last 3 years. It's not going to happen by June, but it's going to happen over the next 3 to 4 years, in my considered opinion. So you should expect much higher prices than you thought were possible even a year or two ago. And you've got to accept, in order to get there, you're going to have to accept very large volatility, surprises out of nowhere like what we saw with coffee over the last couple of weeks, and you're going to have to give up predicting so much and do more responding. So don't try to predict where the market's going to go at a certain time, but respond to where it does. If you believe we're in a new bull trend, then you buy weakness, you wait for it patiently, and you sell a little bit into strength, but you don't get carried away and put every cent you have at the top of an intermediate trend. And by buying weakness and selling some strength, I think over time you're going to build up a very powerful position in the stocks that you feel are the best ones. And when we finally get into the public mania phase, which I think will be developing by sometime late in 2015, you're going to have a very large position in the very best stocks that you can find, and you're going to be ready to sit at the winner's table. And as David Morgan has said for the last decade, and he's shown the research time and again that shows this, 80 to 90% of the entire profit potential of a secular bull run occurs during the last 10% in time of that run. So if you triple or quadruple your portfolio over the next 2 years, expect that if you have good stocks and that this thing plays out in the public mania phase, which I think it's going to, this time it'll be on a global basis rather than just one continent or two continents, you're going to see your portfolio, after having tripled or quadrupled, has the potential to double or triple again as we move into the phase where everybody that you know wants to buy gold, silver, platinum, palladium, and mining stocks.
What kind of influence does the crisis in Ukraine have on the price of gold right now?
Well, it has a certain influence because it causes the recovery in the European stocks and even in the Russian stock market, which I think was down like 15% in one day. It brings all that into question. But I think people should look at that as real noise rather than what's going on in the bigger things. The other issues we've talked about for years about the deficit spending, the inflationary bulge that's coming, this type of a thing, the lack of yield in the mines where they're producing less gold and silver for the amount of energy put into it, these type of things. Those are the systemic issues. Ukraine may or may not last for a while in terms of an issue, but if you sidetrack yourself on that and ask yourself how Ukraine is going to benefit or affect gold and silver to the exclusion of these other things, I think you're narrowing in too much focus, and you need to see the bigger picture and see Ukraine as just a small symptom in the overall melees that is driving the metals higher.
And of course, China hasn't decided to stop buying gold hand over fist either.
No, they're continuing to do so while attention is focused elsewhere. Their strategy and tactics have not changed one iota. It's just that we're not paying much attention to them right now, and they're continuing to add to their stash while we look elsewhere.
Thanks a lot for chatting with us, David.
It's been great, Jim. Have a good day.
You too. My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.